It's Wednesday. I had to think about that one for a minute. Hold on. Let me turn this off. It is Wednesday, April 19th. I only have like an hour here. I've got the maid showing up in an hour, so we don't have a whole lot of time. But I wanted to share some new ideas that I identified. Ronan says hello. Kitty cat gets very jealous if he doesn't get all the attention. So sorry, he's going to be noisy. I've got some new ideas for some setups that I've been watching, but I needed more trend days. These are ideas that primarily work. Well, let me get into it in a minute. First of all, you can get a hold of me at Red Ben Trader on Twitter, and then if you want to learn more about trading with the algo, get a hold of my coach Simon, and you can ask him about getting a 5-day free pass to the trading room that he runs. Now, his trading room does have a monthly cost, but it's, in my opinion, pretty affordable. So give him an email, trade the letter N, wordperform at gmail.com, and realize that in the room, the version of the algo that we're using is a lot simpler than the one that we're going to look at today. The one in the room is only a few signals. You can see it's easier to read, and it only has the signals that you need, right? So at this very moment, it looks like this. Whereas mine has, well, first of all, it's got levels added to it, which I can hide. But what I've done is I've taken Simon's algo and added some of my own ideas in a similar way as he has, just so that I can analyze and like trade in the way that like personally works for me. And that's the nice thing about having this algo on your desktop, which is an option with the room, is I don't, while this is, you can do just fine with just these signals, right? You don't need any more. Simon trades off of this and does great, right? As do a lot of people in the room. And many of them significantly better than me, actually. But everyone's a little different with what they need and what they want to see. And I just need a little bit more information. And for a lot of people, this is going to be overkill. It's going to be way too many signals, right? But realize that you can make this look however you want. Like, for instance, I have another one on another screen that has just a couple signals and lines on it that we could look at too. So there's a lot of ways to skin the cat, right? Excuse me. But what matters is that you find something that kind of fits what you're doing. So right now I have all of the signals showing. Sometimes I will hide, like I showed you. I'll use like a some of these what are they called? The layouts are significantly simplified, so that I can, for instance, go here and it takes away a ton of the signals up here. Now I left these on here, but you can probably see that the difference when it comes to how many different types of signals we're getting is way limited there. Whereas here we have more colors and more signals and stuff. So you can build it however you want to do it, right? Um, and that's fine. Okay, so um, yeah, I was waiting for what I was getting into before. I've been looking for better ways to trade trend days. I personally find getting getting big gains on trend days really difficult. Some people do really well, right? Like including people in the room. Like some people are great at it. Um, I'm not. I do not usually do as well on trend days. Now I know better than to fight it, and I usually won't have a big losing day. But what usually happens is something like what happened today, where the this one's a what's it called, an eval. So I'm trading bigger size. That's why it's bigger. You can see it's got less trades, but more money. It's because it's an eval, and so it's trading. And then I'm not using the trade copier as much as I used to. I used to have it on all the time, but what I'm finding is that like a lot of times I know when there's a high likelihood that like a pretty big trade might show up. You don't know exactly which one's going to be the big trade, right? But you get as you get more and more comfortable with your own signals or the algo that Simon uses, whatever you're using, right? The footprint, whatever. Um, like which setups, like they might either have higher odds or they have a bigger chance of expanding. Not just like it gives you more a better risk reward ratio basically. And so I'm trying to reserve using the trade copier for the times when my risk reward ratio is better, and that the potential for the potential for the trade to not just work but like turn into something bigger. I'm trying to use it then, but the times when I'm just scalping back and forth, which is a lot. I'm finding that if I use the trade copier, I end up like getting frustrated because like I'll give away gains in all my accounts, and it's just I don't know. I guess it brings up like subconscious fears of blowing up from like lots of experience doing that, right? So what I've done, like I said, is just changed how I use the trade copier. So as a result, the lower one here is actually getting less trades. Okay, but what I should see is that the win rate. Hi, cat. The win rate should be significantly better, and it. Stop. Sorry, he's really noisy because he's a kitten, and a sphinx, and they're just noisy animals. So and it's very distracting to me. The bottom one it has only basically the swing trade opportunities. Sometimes those are going to work out, right? And your net P&L is going to be significantly better despite taking less trades. And that's what happened today. And trend days are the days that usually works. You wait for the bigger opportunity, you get in there and you just hold it as long as you can, right? Now, this could have been at least twice as big, right? This is actually, I mean, it's fine, right? I'm not like, I have gratitude, but the potential for a day like this could have been a lot higher. And you can see that my win rate is healthy, right? This is what I like to see on a trend day is like above average, right? because my average, if you've been watching, my average is probably like 60. It's not super high. Some in the room achieve a lot better than that because they're more conservative than me. I'm a little bit more aggressive than some people in the room, and definitely less aggressive than others. So your win rate's gonna vary depending on your style and what types of setups you're taking. Um, but anyway, for the trend days, it's important to me that I have ways to basically filter out the excuse me, the some of the scalps and focus in on those trades where I might be able to not only get my 10 to 12 points that I usually go for in NQ. These are all NQ charts. I've been focusing on just NQ for a while now, just because I've been studying it so much. It sometimes means I don't have a lot of opportunity, but a lot in the room actually covers many different futures products. There's people trading gold and bonds and a lot of ES, but NQ is the one that I'm most confident with, and I have a hard time jumping around during the day. Some people are really good at that, and that's an awesome skill. I don't. I have not worked that skill to like mastery level yet. I get real distracted if I give myself the ability to look at any chart I want at any time. I'm like flipping all over the place. Right now, I have them because there are days where right from the get go, like, okay, NQ is just not doing it. Right, that happens, but it's rare. Usually, like there's a lot of times when ES is untradeable, honestly, because it's like such a tight range, or it just like doesn't have any pullbacks, and but usually NQ is tradable. Lately, in the last month or so, there have been days where even NQ has been untradeable. So it is really important to have at least some setups figured out for like a non-equity index if you're a futures trader, in my opinion, like having something to go to. Otherwise, you just don't trade those days. And I think that's okay too. Because it's if you normally trade equity futures with leverage, you don't have to trade every day. So if there are situations where you don't necessarily do very well, or where the index is just absolutely untradeable, just don't trade it, right? And some people have a really hard time with trend days. I used to be one of those people, and I'm still definitely not as good at trend days as I am in on balance days, but I've gotten better at least at identifying the direction and the fact that we should not be fighting that direction, and that can be a lot harder than you'd expect. But so I figured that out. But the hard part for me still is determining which one of these like signals and setups and patterns and stuff are more like suited for the kind of straight up like rotation, like lack of rotation that you tend to get. So here's the open, for instance, on the algo. This is the 15 tick, which is a little bit small, but it's what I've been trading lately because we've been so slow. So pre-market, this beautiful dip, right? And then an immediate response. We got a really good setup, which is these rings. If you get one of them and then you get two of them, or you just get a ring on a second low, then you get a triangle up that's pink in particular, but a triangle up right after it is required. The potential for breaking this pivot is high. All right, so ring or any low really, then pull back and then come back in with a ring, or it can also be a higher low, but this actually works better where you trap back into here. Now, for those in the room, on the 15 tick, it did not trap. It did not. The first bar did not close inside of the range of this bar. So I used trap back in with it's not a true trap back in on the 15 tick. And there's no apex here on the 24 tick, right? On the bigger time frame. Here, let me just get rid of these other drawings. So there's no, oh, then you can't see this. Well, there's no apex here, right? But I'm trapping back into that wick with this ring bar. And you can see the ring shows up on both of them. And it's a relatively rare signal to see in general, but you want to see it on a higher low or a second low. So here it's set up in both ways. You had the higher low here, and then you had, like, I guess it's a lower low, but you can't do this when it's trending, right? You don't want to fight the trend, but it's on the, you can see it on the bear side too. See the ring here, and then you get a ring here, right? So this one, you've already kind of slowed down the trend, and you've gotten an apex, one of these little flags, the purple flags, or a yellow dot, or both. And then you pull back and give the ring, right? The ring only has to be here. It doesn't have to be here, but having the first one almost never works because it hasn't established, yeah, we'll get rid of lens. The first one almost never works, so like I could even go back and find another one. So here, so this is fine because we've already slowed down and we've gotten like a low reasonably close, right? It's okay. Likelihood is that we're actually coming back up here. This one didn't make it all the way, but it did enough. It would be way better if if this low was a little bit lower, or if this would have chugged along for a while, a little longer. That would have been better. But now this one can create. Oh, here there might be another one right here. So see this ring. You had some consolidation. We made a low, and then this is like a second low, like a double top, right? The chances that this breaks is really high, right? So that's just, it's an example of how some of these setups work. That's not the one I was going to talk about, but that actually did show up a couple times here in the pre-market. So, okay, so anyway, what you saw is as soon as we opened, right, here where the lines come down, right, that's the change in, that's cash open. You had an attempt before that to push down the ring bar, and then they couldn't get back into the range of that ring bar. This ring bar indicates the potential for bears to get trapped down there. So this is your alternate entry once you see this. So if you didn't want to enter here, which is fine because it's like on a new low, right? When it comes back into that zone and it can't hold, and you don't know that for sure until here, right? But once I see that, it's like, okay, that area is holding as support. And so that's the reversal. And then the very first, oh, and then one other key for that I have talked about before, but I want to reiterate so I don't forget. When you get a pink bar, a very easy way to determine whether or not you want to be bullish or bearish, there's two really easy ways. The first very easy way, look for pink bars recently and see if you can get bullish bars, the white ones, bullish bars that aren't pink, with the little dash, the little yellow line right there. Here, let me get real close so you can see it. The VPOC of the actual bar, that little yellow dash needs to be above a pink bar. And then if you don't put any pinks above that bar, it's bullish. Purple is fine, but no pinks above that bar. Okay, so right here, I know don't be shorting, right? Unless we see a pink bar, I can't sell this retrace. Okay, you can see over here, you got pink bars, and then pink bars. This one was a bullish bar, but if you look at where this is where the VPOC was, it wasn't above the high of that pink bar, so that one wouldn't even really have made it. And then the very next bar is pink again. So this one's pink. And so that doesn't help you either. Doesn't help you if you're bullish, right? So like I said, you wouldn't be bullish yet, but then right here you'd be like, okay, you don't have to buy, right? I'm not saying it's a buy signal. It's just don't be short. And if you have a setup, whoops, hello mushrooms, what the fuck happened? There we go. If you have a buy signal, now you can start taking them. Whereas here, you don't really want to be taking like this all by itself. It's a bullish signal, but we've had no sign of any buyers before this having any like success, right? Whenever anybody shows up, the result is sellers just fold. They just give up, which is what the pink is. And when sellers give up, it's not necessarily bullish. It's only bullish if the buyers respond to that with buying. If sellers give up and buyers aren't there, guess what? Sellers are coming back in, right? So you can do the exact opposite, or the exact same thing, I guess, inverse, with purple bars, because that's just the inverse signal of the pink. So if you can get underneath a purple bar with the yellow line, the VPOCs of the bars, on a bearish bar that's not purple. I know it's a lot of information, but again, looking for a purple bar, can I get the VPOC line, the yellow line, can I get the yellow line below it on a bar that is bearish, the stone color, brown, and the VPOC is below the low of the purple bar, and this bar cannot be purple. So this is where you could say, hey, I can take continuation trades lower if they set up. Well, we get the setup here with a pink bar, triangle up, getting beat by a lot of volume is basically what the diamond says. And then the little box says that like the, I'm not going to go into it. It's just another way to like enter a trade with the trend. And it also means that high here may have sellers waiting there. It can get trapped, but for now we should assume sellers are waiting up there and kind of will defend pullbacks unless we get above a pink bar. Then they'll defend pullbacks and get trapped. So see how they defended this right here? And they did it after a pink bar. Sellers are trying to turn the market, right? Everybody, we've gotten above the purple and the pink. If you look here, this purple, if you draw a line under that purple, we got a bear bar with the VPOC below it, meaning sellers were ready to sell, right? Like that's usually a sign that it's probably bearish, but we're still above a pink bar. And that means it could be bullish, right? So it's neutral at that point. This is neutral ground, right? And the potential for someone to get trapped is pretty high. And so now you have to decide on the bigger time frame, do I have a level here, right? Is there a reason to think that this might be an important area to look for? Well, it's the low of the overnight lows are right here, right? And there's like a previous VPOC and stuff like that here too. So if you can break over this, it probably becomes support. I got this signal saying this is probably support when you test it and bounce. And as long as you're above a pink bar and no longer below the purple bar, it's all good. So you can get in there, in my opinion, or you wait for them to get trapped. So right here, sellers try to defend, like I said, and that should be expected. So, but they put in a purple bar, right? So if they can't put a sell bar under this, it's probably going to squeeze because we've already had neutral and now they're defending and they will give up when we get a lift. Now, this was your most aggressive entry right here with all the aggression. You could come in right as you confirm the aggression as the bar closes, or you could wait for the triangle up. Although it is a pink bar, it's okay because we've already gotten above pink bars. So now I can start buying on the pink bar. Normally, pink bars are a little dangerous to buy because if it's bearish, you might be buying the very top, Well, it's no longer bearish, right? It was neutral to bullish. And so now pink bars are fair game. Double pink followed by a bull bar is even better. And now I know they're trapped. These guys are trapped. And how do I know that? Well, the easy way is draw a line, see if they develop volume above them. Did you get the yellow volume line above it? Yes. Volume developed above the previous high. That previous high had aggressive sellers, thus sellers trapped. Okay, and then from there, you don't know it's a trend day yet, right? But the potential is there because of the big overnight like gap, right? So here's your other opportunity to get in, right here. Now, does it mean that this area has to hold? No, it doesn't have to be a trend day, right? It doesn't have to immediately just explode. But this here was the trap sellers at the lows, right? So if we want to watch that area. So but it might not even ever come back there. Now look what happens. We get purple. We need the yellow line to get under purple on a bear bar, which happens right there. All of a sudden, sellers are in the market, right? When buyers give up, sellers are responding with selling. So now, to be bullish, I need to get above a pink bar with the VPOC on a bar that's not pink, which happens right there. So that's the first sign of like, okay, wait, if this was balanced, what should happen? Well, we should be coming back to support, right? That's what you would expect if it's balanced. So this is the first hint of like, wow, we can't even get, I mean, look at this. Like if this is the open, if this is the low, think about it this way. On the very first push up, like we can't even get a 50% retracement. Like, right? My first thought was, okay, like we might never come back down there. That might just be the low, right? But not surprisingly, that's not the case. They get a lower high. You can see you got the ring here, but it was the first one, so you don't just short it. You wait for that second attempt. Right, and so you did have a short opportunity. So now, remember, I have that level down here. I'll just make it a line. Well, here, well, it's this whole area. It's technically up to about where all the volume was. It's more like that, but we'll just do the whole box, because why not? So that area, I know shorts are trapped, right? And if we wanted to, we could come back here and say, well, look, they chilled here for a long time, right? And so I could then draw the volume profile from wherever I think that kind of consolidation kind of started. And so I'd say it's here where it started to lift back up and then is over once they begin the climb. And so that level of where all the volume there, the VPOC of that drawn area is right here. So if this is very bullish, that's going to be support. Just like yesterday's VPOC is sometimes support, right? Well, what do you know? It's like literally on the dot of where the buyers showed up. And they showed up after a purple bar with a blue outline. And so it's just like boom, right? So and so you'd expect this now to create a huge lift if sellers were done. Right? Everybody knows to watch areas of volume for a bounce. And so this scalp is very reliable. But if this continues higher to the high, it's like, okay, don't short all day, right? And that is what they do. Right? So once you see this, oh, and then once again, low, second low, ring, triangle up, pink bar, I'm long, anywhere in there. All right, that's a very reliable setup on both directions. So, but the important thing to understand is that the location of this bounce was key to identifying that there was no sellers in the market, because that little drawn where all the volume was when they consolidated pre-market, right where that volume was, they couldn't even auction below it. and they came up and made a lower high, right? But look, they were neutral here. Above pink, right? Below purple. See that? So that little area is neutral. So whoever wins that fight, you could even do this. You could say, this is where we got above pink. This is where we got below purple. Whoever owns this area wins the game, basically, of who owns this whole thing. This whole pullback is either continuation or reversal based on who can take this zone. Because, like I said, we had both. We had sellers giving up, followed by buyers. We had buyers giving up, pulling orders, followed by sellers. So that little pattern, pink, bullish candle, white, I guess, purple, bearish candle, and like I said, the VPOC, the little yellow line, has to get above the pink and below the purple low, right? It's gotta go beyond the bar on a bearish bar that's not purple and on a bullish bar that's not pink, to be able to really confirm that, okay, not only did sellers pull their orders, but buyers did something about it, right? Not only did buyers pull their orders, but sellers did something about it. When we see that, one right after the other on this tiny little time frame, we can say, hey, this is a pivot. Like, they care. They both are trying to fight this, right? Nobody's backing off. And it's very clear why, like I said, when you go back here and draw the volume profile and you realize, like, did it erase it? I guess it did. But when you draw the volume profile and you realize that that's exactly where the volume was, that volume build from pre-market and the open was defended, and then they couldn't even get through this anymore. It's like our first guess should be, well, until they break this, it's not bearish, right? Because this is a higher low on a higher time frame. Here, I'll show you. It'll be obvious on like the 40 tick. So on the 40 tick, we're making higher lows, right? Higher lows. It's as simple as that. It's higher lows and higher highs. Simon would point out on the 40 tick, we are in supernova, which is something we talked about in the room. And if you don't know what supernova is, don't worry about it. It's just a condition of knowing who's in charge, and the potential for big extensions occurs after getting over an apex and closing above it. Then now what we love to see is when this bar gets tested just a little bit below and then it bounces. This one did not quite trap anybody, but the reason was because of where all the volume was, right? Like I showed, if you measure this, it's very clear here, right, that this was all down and then this is sideways, right? So if you measure the volume here, what you're going to find is during the sideways period, the majority of the volume was right there. Boom, boom. Right? So if you're watching these things, it becomes relatively clear. Oh, I should get rid of those drawings. It becomes relatively clear if you know what to look for, that's for the reversal, right? And so let's say you missed that because it's easy to do, right? All this happens kind of quickly and you might not be looking at higher time frames. Let's say you totally missed that trade. That's okay. Now you have to figure out, how do I get a hold of this, right? This straight up, like what many would say is kind of like ridiculous nonsense where they just refuse to come back. And all it is they're all trapped, right? These guys, these sellers, got committed to selling and got trapped. That's all it is. That's all the market ever is. So the first thing we should probably do is say, well, where did they get trapped? But if we want to try to get a hold of this, right? Where did the sellers get trapped? Because if the sellers get under that, it's not bullish, right? If they can what we call reclaim this area, it's not bullish. So let's begin here, down to this low, because we know for sure there were sellers down here, right? So our first objective, if we miss this, is that maybe we can catch it here, right? Now in this case, I might not have drawn it right. There, make sure it snaps. So in this case, it looks like it missed it by a tick or two. If you tried to be cute about it, it technically there was like maybe a tick in between here. But that's not the point. The point is not to buy the low, right? It's to wait and watch and see what they do when they re-enter that zone. Well, in this case, they couldn't even get in there. Then you got a pink bar with a triangle up it. Now, it's too bad that there was no aggression on this bar. It's not a star. It's not quite as easy to see, right? But this one got POC above. So they lifted volume despite trading lower. These work really nicely, particularly if you have either trapped an orange bar previously, which is the inverse, or if you failed to get under green bars, then the green bars will still work. So an easy way to do this is if you put your line, if you're in the room and you have the POC over POC, on Simon's it looks like a little box, but I already have a box for something else, so my signals, like I said, are different colors and mean something a little bit different than his. It's just kind of there's just only so many ways you can mark a bar, and so and the fact that we pick the same colors in some cases is just unlucky. But I have like in my mind like what colors are supposed to mean, so I like them all to be coordinated. But you can see here we had the green signal, right? And then they tried to get under it, but they couldn't get the yellow volume line below it. See, it got to it, but it couldn't develop volume down here, so it bounced. And then here it did literally exactly the same thing. It came down to that level, which is obviously important, and they did trade under it, but not with any volume. And then as soon as they traded under it, they came back, someone bought it again, and the result was volume shifting higher after trading lower. Right? So that setup is good. And if you want to wait for the triangle, your risk reward improves significantly. So that is a valid entry in my opinion. And it did not work. I was not 100%, right? These do not always work. But had this been just one tick lower, I would have skipped it because it would have already just gotten below the low of the green bar, but it was on it, so I took it, right? Now they set up again down here, and this one I would not take because as you can see, we've now traded below not only one but two green bars and gotten the VPOC below it on a bar that's not purple. That's the other little caveat is purple and pink bars don't count when it comes to like getting over or under things because those bars rarely have really any volume, so that VPOC dash doesn't really mean much there. This one, though, does. So once I see this, which is underneath a green bar, I don't really want to be buying green bars anymore because I assume that bears are in control. Notice we're getting into that. This is marked off because it's that area where they got trapped, or potentially, right? So allegedly. And so my first thought here is don't buy this because we're trading underneath green, but we are at support, right? Well, then they put in another one after holding this low, and that's a hard entry to take. It's better because it has the triangle down right before the green bar, and it's also better, I believe, because we're not chopping. Yet we got a yellow arrow on a purple bar and then immediately got a green bar after it. Meaning that while it might be bearish, right, we've gotten bars underneath purple bars and no bullish bars underneath pink or above pink. So it is bearish, but if you want to be aggressive and try to catch the low, the best time to do it is when you had some sort of sign of aggression, right? A triangle, a star, an arrow, something, an orange bar, right? Some kind of signal down here, right before a heavy buyer. And this one had a pink diamond, meaning it's got a lot of volume. So suddenly you shift volume up, which is what green says, and it was more volume, significantly more than what we were doing earlier. So you can at least target back to what I've been calling my magic line, which is this dotted line. That is an extremely important line for trend days in particular. If you can get above that line with the yellow VPOC line, the chances are you can actually take long entries for scalps over and over again. In the same sense, if you get under it with VPOC, which happened right here, you can probably take continuation scalps lower, well, even on triangles. So getting 10 points on the triangle entry here is way easier than trying to do it when your triangle does not have a VPOC below the dotted magic line. So if you think about the easy way to think about this is look for triangles, right? So here's a bearish triangle, which are red. Here, let me erase the lines, because this is super helpful in trend days. It actually works in balance too, but you need a big range to do it in balance, not a tight range. So triangle to the downside, triangle to the upside, okay? If you look at now the dotted line, which is basically a developing point of control, but it's tweaked for Renko. And then the yellow, so the dotted line is like developing, right? Where volume has been and where most of it is, right? But it's over time, right? Not range. And then the yellow line is where volume has been based on this range, right? So we're watching the yellow line compared to the dotted line on the bars that have triangles, okay? So for instance, this triangle, you are above the line, right? The yellow line is above the dotted line. So you would think it's probably bullish, right? And you're probably going higher. Generally, that's going to be the case. The trouble is it might pull back first before doing so, but look how far away you are from the dotted line. That dotted line acts like a magnet all day. So the much better trade is to wait until you've just barely broken above it like that. That's a much better scalp. Now, like I said, this is just a scalp strategy. It does not mean, because look, once it gets above this, it's anybody's game. Because now you've gotten a bar this far away from the line. Chances are improving that you're going to mean revert, right? Because this is basically the mean. Volume's mean, right? Well, this one's got a triangle down, and you can see that the developing volume shifted up while the yellow line shifted down. That is a beautiful aggressive entry. Okay? This one, the yellow line did not make it above the developing dotted line. It's a horrible entry, especially when the high is above it, but all the volume has developed below it. And the bar previous to the pink bar, if you look, these green bars, the bigger this differential of the yellow line, the bigger the pitch of the yellow line, the harder it is to turn on a dime. When it turns on a dime, what it usually does is wiggle, 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 turn, right? But if the V on every time frame, that V bottom with volume is extremely, extremely rare for this to result in this. Okay? Usually, like here, look, V, V. That's going to be the exception, right? And the reason it can do it here is because the bullish bar, look where the volume is. It's trapped people on the bullish bar, right? With volume. On the green bars, oftentimes, that's not the case. There's barely any volume down here. All the volume is way up here, right? Doesn't make it bearish. It just means that there's not really any reason to expect sudden panicking. So when they have a pink bar here, that's not necessary. It's sellers pulling their orders, but it might just be because they're planning on getting short higher. They may have just wanted to wait a little bit to see what was going to happen after this volume build. And then once everybody disappears, they come back in. You can see you get the sign of aggression, and the VPOC line, the yellow, is below the dotted line. So you could take that for short, right? Then This one, look how far away the VPOC is from the dotted line on a purple bar, right? Yes, it's got a triangle, but you need a ton of energy to keep moving the market when you're this far away from the dotted line. And so not surprisingly, we get an immediate mean reversion. And you can see that while the green bar has volume back up here, right, higher, and the pitch looks big compared to the previous bar, look what the pitch is compared to where it was previously. It wiggled V. That's normal, right? I don't know how else to describe it, but if it's just down, up, V up, and the bullish bars VPOC is way up here, right? And especially when the bearish VPOC is way up there, meaning there's literally no volume down here. You can see it on the footprint too. Here, I'll show you on the footprint. For those not familiar with the algo, I'm going to go to the same spot on the footprint. Let me just get everything lined up. Okay, so we're going to find it. So it is right there. So on the footprint, we'll move it over so you can actually see it. What you're going to see there on the footprint volume shifted up, but look below you. Like emptiness down here, right? Like, yes, you had one seller down here that might have gotten trapped, right? So, you know, like one dude, basically. But what it basically is telling me is, if I can break through this, it's done. So the one positive of the V bottoms is that if you want to be super aggressive, you could literally put your stop right there, right? And if because it's either going or it's not. But that's not going to work 50% of the time. You'd have to have a level and all that stuff. That's not a great strategy all by itself. Probably want more than that. But what I find fascinating is that when you don't have any volume down here, that V is when it's this bearish. Oh, let me make it smaller now. When you've already put in a high and you've already got guys trapped up here, and you've already come up and trapped these guys and gone lower, right? Like, there's no reason to think that buyers are just going to suddenly show up. Even if you have a low volume node in a higher time frame, which is what this red area is, it doesn't mean anything if there's buyers trapped, right? Best case scenario, we'll come back up here and test where the buyers got trapped. Best case. But even if you look at this area right here, right, this little consolidation, like, even if you just looked at that, look at where the volume is. The volume for this is up here. You really want to be a buyer when just because they shifted volume up right there? Like, do you really think they're going to get over that? And do you have risk reward to even get to it? Right? And then obviously if you're watching the footprint and you see this and then this, like, you know you're done. Right? But what I'm saying is, well, that you can certainly do that. And if you can do it fast, cool. I can't. So for me, it's way easier just to say yellow line, you know, is trying to V bottom. My dash is in the body of the bull bar, and there's no sellers down here because the yellow line never got down there. So, and then all my volume is on the diamonds. That's where the volume is. Or I can just look at the dotted line, which is like a cheat sheet. Say, well, if we can't get above that, it's dead, right? So either that's your target or wait to get over it. It's really as simple as it gets. And so it goes lower. Now, the inverse is also true, like I said, so this one can be a scalp lower, right? So at this point on this tiny little time frame, it looks kind of bearish. But remember that we're still trading into this, right? Which I pointed out earlier is a location where sellers potentially got trapped, right? Any of those rings. So anyway, we get the little wiggle, we get the lift, right? We actually get sellers trapped down there. This outline is really helpful. That's actually, it's basically like delta divergence. And so it's not an immediate buy, but when we can't get sellers down here, like, and remember, purple bar, bear bar, that guy is capable of getting trapped, right? Because he responded to buyers pulling their orders by selling. So he sold, volume shifted up, it couldn't go anywhere, he got stuck. See that? And then they got over him. Right? So once that happens, and you knew that this was a location to watch, it's like, okay, well, maybe, you know, we're now, that's yet another higher low. So maybe shorts are just getting stuck down here. They're shorting into the hole. So let's just be bullish. That's kind of your first sign that might be the case. Or not first sign, but another, more evidence. And then, not surprisingly, this one is explosive because you had this little wiggle here, right? Now, here's something that I found that I wanted to share that's kind of neat. When you know the direction, so right here, we know seller's trapped, higher lows, higher highs. Selling is not getting any, is not a good idea because there's someone trapped right here in front of you, right? So I know I want to be a buyer, but how do I get long, right? A very easy way that might work, it seemed to work today, but I don't know if it always does. If I get a blue dot in the direction that I want to go, right? And this oscillator, the volume zone oscillator is the bottom one. This is my own twist on the volume zone oscillator, and it's basically a volume zone oscillator that's been tweaked to show not just cumulative aggression, but also like comparing, how can I say this? Like it's giving preference to, it's like the difference between an EMA and a moving average. It's giving preference to the more recent ones, the more recent bars versus the older bars. So it's gonna show me like differences that like it's gonna have less lag, right? So you can see on the one with more lag, the volume zone oscillator, you can get this free on Sierra charts, and it is helpful to see trends for sure and to identify potential reversals with real big divergence. This little divergence is no big deal, but if it's like big rip and then little like rounded lower high, yeah, that's not something. Oh, hold on, let me see where my maids are. Oh, okay, nothing. Yeah, because this one's got more lag, it's not going to show the immediate effects, right? So here you can see it's lifting with a peak, right? But here on the one that has the more recent bars showing me more information, getting more precedence, it actually dipped already. This was the peak of aggression here, and it's now dipping. So that difference between the two produces these dots. Okay, I built that one, so I can share that with you. I can't tell you how to build Simon's. That I don't know, and I wouldn't tell you anyway, because he sells a product, right? But for me, I produced that signal myself by looking for these inconsistencies. When I know my direction, A, and B, when the dot shows up, yet the indicator here, the higher indicator, the volume indicator, is above zero. It's green and above zero like this, right? So it's been rising, it's bullish, and it's above zero. You don't really want to just buy it because you're already it means you're kind of already extended. but it is bullish. So the better trade appears to be to wait for a pullback and buy either the trap back into that bar, which means wait for it to get tested underneath, and then for buyers to respond. So you could buy it here once that bar closes bullish, right? You end up buying it in the same place, but you skip this, which is useful for me because I don't like this. I'd like to immediately be profitable, and I'd like my pullback not to go underneath the low of the bar I got it. So the way to do that is to not buy the dot, but to buy the pullback right here, or wait for a dot that shows up under the zero line of the indicator. That dot, if it's bullish, you can just buy it often, right? But this one and this one showed up when the indicator was above zero. See, the first time it crossed back below zero was here, right? So all of this, I want traps back in. Oh wow, is the market moving? I'm not gonna. I don't have enough time to trade it because I want to explain this. So sorry, we're not gonna watch the live market. I want to explain this real quick. We'll look at it in a minute. But that's an important piece to trading with a trend because now if I know that rule, I can just buy the blue dot, right? Even if I didn't want to be aggressive and buy the trap back in, I could just buy this because I know it's below zero, right? Yet look at volumes on oscillator, it's bullish, right? And then we have an aggressive seller who then gets trapped. So now I know that this is an area I might actually want to do business at in the future. So if I get an opportunity with pullbacks into that zone, I might not have done this right. There. If I get an opportunity with pullbacks into that zone that produce a bullish bar, especially a bullish shift, well now that trapped area is acting as support, right? So this dot is another example, right? Well, here, we'll do it one at a time. I'll show you how this works. Okay, watching this indicator. Is it bullish or bearish? It's above the zero line, bullish, right? Don't just buy it. Buy the trap or the next dot that's below zero line, right? So I'm buying this. Even though this doesn't have an apex, I know technically it's not a trade and perform, TNP break trap back in, but the imagine it does. It's just as good as having an apex. That's what I'm trying to say. This one I missed was above the zero line up here, right? Just barely. Draw the line. Cross. Maybe I did do that one. That is your entry, right? This is your entry. Now, there's no dot here, but there is one here, right? That one is clearly above the zero line, and it's bullish. If we got a bull bar to trap back in there, like we did here, it would be an entry. It just didn't show up here, right? It didn't show up. This one, I just erased the lines. This one is a dot, and it's above the zero line, right? If I can get a pullback and then trap back in there, I can buy it. Pull back, no trap back in. It's got to be on the first bar. The first bullish bar needs to trap back into there. Now, but this one was a legit trap back in. This one is a trade and perform trap back in. As was, oh no, this one was not, right? Did they trap underneath this? They might have touched it. I don't think this one's valid. This one is. So this one in Simon's room is a buy, right? So we already know how to catch that, and we did, right? We're doing that all the time. So that one I already knew how to catch, okay, but the other ones I didn't. So that one turns out to be the best. Not surprising that, the high odds entry that Simon teaches everybody is the one that produces the best, right? And so that's the one that I'm using my trade copier on. Okay, but these other little scalps, I can, as long as I'm not taking hard losses and I know my direction, I can take it just only one account at a time. Okay, so now see how we don't see any dots, right? That's kind of suspicious, in my opinion. Usually you see a lot of dots. So right there, I'm like, what's going on, right? Also notice the yellow dots are not producing trap back in opportunities, right? We're just screaming past them. It's a sign we're not bearish. But what you can see is that that level becomes support. And that's very normal, right? It's not necessarily a buy, but it does become support. So this was my short. You can see we had a high and then a ring on a second high, right? I've talked about that entry already. That one triggered there and I got in. Now, unfortunately, I didn't hold this very long because I really didn't think that shorting was a very good idea today, but it's a pretty consistent setup, so I decided to take it. Plus, we got under. See how this background is green? That is bullish divergence, and we got underneath it, which is normal, and trapped back into it. So that could have made that an entry. But when we give that up, if we get VPOC below that on the bar that's not purple, you need to be cautious. And so it was purple, bullish. There. So this bar got VPOC on a bearish bar below that bar. So now in my book, I need to trap a seller again before I can be a buyer. I'm assuming it's bearish. I don't just want to sell it, but I'm assuming it's bearish. So knowing that, this dot, thankfully, was on the bullish side. So I'm not necessarily buying a trap back in there because it's not an apex, right? So the only bear setup I could take would be a trap back in on that level. That's it. Other than that, can't do anything, right? Except for our regular trap back in. But even that is out actually because I've already identified it short. So no buys possible. This dot is on the bearish side, so nothing. You could just buy it if you thought it was bullish, but I don't think it's bullish, right? So we wait. Now this dot is on the bearish side, and I think it's bearish. Yeah. So I could just sell this, and technically you could do the same here, but it's pretty dangerous because look how far away you are from the dotted line. Well, that dotted line now got underneath, got closer, right? So that setup becomes better. Plus, if you look at what we were talking about before with the dotted line, that still holds, right? Triangle line is VPOC's above that dotted line. It can go higher. Triangle down, it's not across the dotted line. Chances are we're only going to the dotted line. You might get a scalp to get to the dotted line, but you can see right here the dotted line lifts, which is always possible. All you need is volume, and this bar had a lot of volume. I can tell because the volume after it had a white diamond inside the bar. And so volume shifts up. Suddenly, bears are feeling uncomfortable, but this triangle up could not get volume above that dotted line. And as a result, they couldn't go anywhere, right? This triangle, if you look very closely, got VPOC below the dotted line. So that was your first scalp that you could have taken with that technique to the short side. But then this one was the VPOC is very far away compared to the range that we're doing. The easiest way to see that, if you don't, is note where the dotted line is on this channel, right? And assuming the dotted line is in the channel, then you don't want to be shorting at the bottom of the channel. You want to be shorting at the top of the channel. The only time when that changes is when the dotted line is outside the channel. See that? Now you could technically scalp to it if you thought it was bearish. But other than that, you shouldn't really be shorting here on the bottom of the channel. In general, that's not a good idea. Actually, this is inverse. I dyslexia that. So, yeah, you're aiming to get to the dotted line, right, for mean reversion. That should be pretty normal. So the further away you get from it, the more likely that you're going to get back to it. So here's the dotted line. It's likely the further you get away from that dotted line, if you get outside of the channel, likelihood is you're going to meet that dotted line somewhere in the future, like near here. So then this one,
below the dotted line and way too close to it to buy, so you don't buy that. This one, right on the dotted line, you can probably chill. We're no longer able to get any volume developed further than you'd expect. So, and like I said, it's been bullish, so you might just want to not scalp anything. And I especially think that because you're at the bottom of the channel, just like this one. And this one failed, so this one probably will too. So, look how you got a green bar. I talked about this before. You got a green bar, and all you could do is put bearish closes below it. You couldn't get a bearish VPOC. See how the VPOC, well, this one's purple, but this VPOC is above the low of this green dot, the green box. So really, and this bar is also pink. So all I have to see now is another bar come after that, preferably that's not pink. Now, this one was pink, and I took it because I thought I was bullish on the higher time frame. So, and then we got triangle above with the VPOC above the dotted line. So that was a scalp, but I took it for a scalp. I didn't see that we might actually break the high. I just didn't see it. This dot was bearish on the indicator, so I wouldn't have necessarily been expecting. Well, it got an apex, so you would have been able to take it as a trap back in as well. Assuming it traded under by a tick, it might not have. But then this dot is on the bullish side, right? So this dot, and it does not get an apex. So if I get a bull bar right there, that is an entry. That is an entry. Okay? Because, like I said, the dot happened when my indicator was above zero. You don't necessarily just, even if it's bullish, particularly when it's bullish, you don't just want to buy this, right? But because it's bullish, you also don't want to sell the breakdown, is what I realized. So I'm like, wait, if I don't want to sell the breakdown, it's because it goes higher. So if it goes higher, can I buy it? And the answer is yes. You can. So again, the dots, even though it's not an apex, I can use them just as if they were a higher low, right? So even though there's no flag here, that trap back in worked beautifully. And that's what I realized. So look, indicator got below zero, right? So this dot is not a candidate. This dot is not a candidate. I know it worked, but it's not a candidate. This dot, it's just an apex. So that one, it might drop back in and it would be fine because it's already an apex. This one, above zero, that's a candidate for a drop back in. That's it. Traded below it, couldn't get a VPOC below it, trapped right back into it on the first bullish bar, closing within the range of this bar. That's a buy. And I don't even think I have to wait for the triangle. Whoops. I don't even think I have to wait for the triangle. What's my target? I mean, a new high, basically, right? This one, above zero. If I trap back into that, so the very next bar, if it's bullish, I can buy that. Okay, this one technically did not trap back in, so I'd have to wait for the triangle. Now, in this case, the VPOC did not get above it on a triangle. I don't love that, right? Does it work? It does. But it had a star, which helped, and a plus, but it was, the VPOC was very low. So it's like, a little bit weird, but it's bullish, right? You just want to be on the right side. So even if you want to be cautious, fine, but it technically signaled. Okay, this one's above zero. Trap back into that, I can buy. No, this one's below zero, but it got an apex. So so it's still fine to do. And now you can see that we're just lifting without even any pullbacks. Hopefully you can kind of see that. Another hint that we might be getting towards top is that we're getting signals that we normally see at the lows, at support, and they're producing immediate lifts. Orange bar followed by red triangle, followed by star, followed by a triangle. Especially when that triangle's smaller as a pink bar, that's a great reversal signal. It's kind of rare to have it all line up like that. It is weird to see it way up here, right? Weird. Plus, we got orange bar down, immediately followed by green bar up, followed by a triangle. That is something you see at capitulation or right before capitulation, and you have to watch very carefully because if you get parabolic up,
after this, if it just goes, that's probably capitulation. And if you see this and then you see a slowdown, it's probably going to pull back, right? So if it doesn't produce capitulation, it's probably a sign you're almost done. But so is getting a reversal signal way up at the highs, literally high of day and at overnight highs, right? So it doesn't mean it's probably going to take everybody out, right? All the shorts are going to get screwed, but this level will probably be traded again. Okay, we have a blue dot. This blue dot showed up underneath VPOC. We're not going to buy the trap back in. So this I'm ignoring. I'm not buying that. Okay, that's why. Plus I had this signal that was like, wait a minute. This doesn't belong here. This belongs at support. Right? You can see that the triangle trades are still working too. Like this one says you're way too far away from the dotted line. Oh, this one didn't get VPOC above it, so there's nothing to do there. And then these couldn't get VPOC below it. This one that got VPOC below it, oh, it didn't. The dotted line shifted down. So that's not a short, right? And we're below zero here, so nothing to do there. This triangle got VPOC above. You could probably buy that. And see how the VPOC, or the dotted line is below the channel? That's a sign that you can be a little more aggressive. Okay, now we get a ring bar. Be careful if we get another low. There it is. Another low. So that's probably the high. That's what highs usually look like. Plus we're going to trap an X. That's a problem. Yeah. So that's probably the high. Then dotted line below the X. Don't take the trap back in. Dotted line below the X. Nothing to do here. Dotted line above the X. You could probably take that trap back in. Or sorry, it's the opposite, below. This one, if you think it's bearish, you could take the trap back into this. It doesn't happen. It's got to be the very first bar that's bearish. This one's below the dotted line. A trap back into that. So if we go up and then turn around at 13,205, so... or I would sell. Okay, I gotta go. I've got maids coming in like 5 minutes. Like I said, I don't know how this doesn't look all that bearish, but if you thought it was bearish, that's how it would work. Because the higher time frame is so bullish at the moment, it's not always gonna work, right? But that would be a valid setup. But note that we got high followed by a ring bar on a double top. That's also usually going to create at least some sort of pullback. The fact that if this goes back to highs, like it's going to capitulate, but most likely it's going to roll around here and roll over, if I had to guess, on this time frame, right? On a higher time frame, it might run into support and bounce and all that stuff. But here, this looks like the beginnings of distribution to me. That's just my take on it. And that's all I'll say on that. All right, I got to go. Thanks for watching, guys. Hopefully this was useful. I know I got a little off on a couple tangents, but at least we talked a little bit about the new trap back in with the dots, the ring bar trade, and using the dotted line to determine whether or not your triangles are accurate scalps. So yeah, I think we covered some good stuff, and I will see you guys next time. Here's the contact info. If you want to learn more about what I'm doing, you can always DM me on Twitter at RedBenTrader. I'm pretty approachable. I like to chat, as you can see. And if you want to learn more about trading with an algo, even if this one seemed a whole lot of like a big mess to you, and you want something simpler, cleaner, talk to my coach Simon. He helps people set up algos to meet their specific like interests and needs, and is an amazing coach. And we do have a futures trading room where we day trade in there every single day, watching Simon's chart. We're able to see his algo. He tells us what he's doing. It's very helpful. Give him an email, trade, the letter N word, perform at gmail.com. You can request a 5-day free pass.